Hi, this is Caleb Owens with the Insurance Experience, and today I'm with Brandon Coonfield. Hey, Brandon, how's it going?
It's going all right. How are you doing today?
Going really good. Busy, for a Saturday, but it's a good thing. I'm happy to be busy.
Yeah, that's most of us are happy to be busy.
Yeah. So, last time we talked, we were going to dive into a new subject matter. We just kind of ran out of time, and I'm really interested in this because this impacts a lot of people's lives, whether they're filing a claim or they're just a normal average consumer. Is just kind of like the supply bottlenecks and the car industry. So,
Yep.
if you don't mind, tell me about that.
Sure. So with the current issue, I mean, it's most everybody knows that you go to a car shop nowadays and you're seeing empty lots, and
Mm-hmm.
it's happening. You're not really seeing many cars. The few cars dealerships that you're seeing that have a bunch, they're all older cars. They're not newer models, which you get the silicon shortage, which creates a computer chip shortage. We go back to basically all the shutdowns that occurred during COVID, and suddenly,
Right.
you're looking at parts for cars not getting made, or there's a
Mm-hmm.
shortage of them. So you're looking at repair times for vehicles, whether this is an insurance claim or just in general, being longer. You're seeing shortages at rental companies because the cars are out longer. They're not having the cars. It just creates this domino effect. And actually, yesterday, I was just kind of tooling around because I want to stay abreast of things, and found out that the United Autos workers are going on
That's
strike.
right. That's right. Yeah, that actually
Um,
just went live. I think it was
Yesterday,
yesterday.
yeah,
Yeah.
yesterday,
Wow.
which again is going to create even more problems with parts with cars. So when you're talking about repair times and you can't get rental vehicles, you can't get the parts in, or
Mm-hmm.
when they are in the rental vehicle and you're spending, typically, say like your typical accident, maybe a couple of weeks, you're looking at repairs. Now the couple of weeks is becoming going from 2, 3, 4, even longer. So you're looking at, typical policy having 30 days of coverage. Suddenly that 30 days is not enough.
Right.
And insurance companies are looking at it going, we've got to make exceptions to some of these things because people need to get around. And, they're the one, as insurance companies, they're eating the cost of that rental, unfortunately, especially when the accident is, not the person's fault that is in that rental vehicle, and they're in that rental vehicle, and you're seeing astronomical rental costs. I mean, it's eating into repair time. So it's everybody is feeling it, and then you're also looking at, if a vehicle's a total loss, well, suddenly the cost of even a used vehicle is gone skyrocketed, or a new
Yeah.
vehicle. You're talking replacement costs for those policies that have it. The cost has just gone up. You want to talk about gas prices being up. Well, let's talk about car prices being up.
Yeah. And so that
Uh,
really impacts people's lives because now all of a sudden they're going to have to go and file a claim, obviously, because they were involved in an accident. And so then, you think normally 30-day rental vehicle would be plenty of time, right? But
yeah.
so now you're saying the insurance carrier, for the most part, they're covering the extra costs. So
Well,
they're
yeah,
bearing the
you
burden.
get those. Say, you're a third party, you get into an accident with somebody else. It's not your fault,
Hmm.
and the company who's at fault, has you in a rental vehicle while the repairs are going on. Well, those times are getting extended because they can't, the shops can't get the parts in. Their, vehicles are sitting in a state of, partial repair. They may be on a lift somewhere with parts torn off because they're waiting for, uh, you know, a water pump to come in, just for an example, or
Right.
even in the case of an engine or even a computer chip. Most newer cars have computer chips in it, and without the availability of those parts, everything just cascades. You get this
Yeah.
domino effect, and it just starts rolling, and that cost starts getting chewed up. You look at what the typical, like I said recently, insurance is kind of a peace of mind, and everybody puts their money together in one spot that transfers the risk. And, they invest that money, insurance companies invest that money. It's how they actually make their money. They paying out claims, and are not making money, but they're making money when they're investing it. And that's, typically you don't have many auto accidents on your policy. You might see, a couple every year, and if you're a really good driver, you might see any for like one every 5 years, maybe, if you're lucky.
Sure.
But when you start getting into these costs where your rental is you're just in the rental car. So now you've got a shortage of rental cars because they're out everywhere. Enterprise, Avis, Budget, they get affected by the car shortages themselves. So now we're scrambling to find cars for people that need them. The people that are in them longer. And then I actually was in an accident, and the rental I was in looked like it had been hit.
Wow.
I was like, so even Enterprise's vehicles, they're like, when they're giving you vehicles, they're like, one of the things your insurance company says when you get into a rental vehicle, go over that thing with a fine tooth comb.
Right.
Because anything that it looked like somebody hit the front quarter panel. I'm like, who sideswiped this vehicle? And I'm getting into that rental car. I'm like, this needs to be repaired. What's going on? But no, it's the truth. Inspect your rental vehicle. Inspect it, because you don't want to pay the additional coverage.
Right.
Because you bring a vehicle in, Enterprise. Well, you've got this damage here, here, and here because you didn't bother to look at it when it was there the entire time. Suddenly, you're paying the deductible through your insurance company, and then they're paying the repairs for that. Don't personally, and I'm not gonna. For me, I never buy the extra coverage on rental. Your policy transfer, as long as you have full coverage, your policy covers a rental car.
Right.
But if you're going to do something crazy, go ahead, buy it. But getting back to what I was talking about, so you're starting to see these things, and it's not just that we've seen it and we felt it. I've seen claims that, like I said, should have been done in a week, and we're 3 weeks, 4 weeks out, and it's like, why are we still paying this rental? Typically a $900 rental bill for like 30 days, 30 days at $30 a day, $900, pretty simple. Suddenly you're seeing $2,000, $2,500, even $3,000, depending on the car, bills that insurance carriers are paying for because they are waiting on parts. And then when the parts are in, that part price is more expensive because there's a demand for it. It's that whole supply and demand issue. The supply is low, demand's high. Well, that price has gone up.
Right. Exactly.
So it's eating into carriers' profits. And don't quote me on this. I want to say last year there was a $4.3 billion profit, or maybe the year before. And this year we're looking at like something like a $17 billion deficit. I might have those numbers wrong. I just quickly glanced at the article that I was reading that was talking. Actually, I think it was 7 million deficit. So you're flip-flopping. These parts issues, these car issues are creating a domino effect that everybody's feeling it. You need that new car. I had to buy a new car. My water pump went up, and that got replaced. And then it kept going in. It was a 10-year-old car. I kept having some issue with the coolant. First it was one set of hoses, then it was another set of hoses, and that led into a problem with the turbo. And the next thing you know, I'm like, I gotta buy a new car. The cost to repair this was more than what it would be to buy a new car. But then you look at it like the availability of a car.
Yeah.
So I got lucky. I got to the dealership. There was 12 sedans on the lot that were new. Really? These are your choices. 12. They range from the low end to the high end, and you're looking at the high end car. I'm like, I don't want to spend that much money.
Right.
And even the low end was a little bit more than what you want to spend. So you're feeling it, whether it's in insurance, whether it's in your personal lives. It affects everybody. You want to get your kid a car for their sweet 16. Mm-hmm. Good luck finding that used car cheap.
Right. Because, I remember, I shouldn't say a handful of years ago, but it was so many years ago, you could buy a cheap car for for like $1,000, $2,000, somewhere in there. You cannot do that anymore. I mean, if the car is not even running, it's worth $5,000 or $10,000 now. Now it's
because all the parts on it.
Yeah.
Yeah, you can take those parts and use it to repair another vehicle that you need to repair. I think my wife is coming up the steps.
Okay.
Yep, we're gonna see my wife here. You're gonna be on live. Say hi. This is my wife, Julie.
Hello. How are you?
Doing well.
Good.
We're doing a birthday party today for my daughter who just turned 15 yesterday. So today we're doing the birthday. It's she's got a whole bunch of her friends over and they're doing that. Cool. And I'm escaping because it's a bunch of young ladies having a party.
Right.
Let me run away.
Exactly. I don't blame you. Get away from all that. So now you're talking about not to mention all of what we're talking about with everything pre-existing with all of this, but now on top of this, the UAW strike, and they're doing it. I think this is the first time with the big three. They're doing it with three automakers. So I believe, and I may be dead wrong, but it's Ford, GM, and Chevy. Is that correct?
Yeah, I think it was Chrysler,
Chrysler.
Yeah, I mean that you look at what's the typical car on the road. I think the most common are like a Toyota Camry.
That's right. Those are Japanese.
Chevy Cruze. The Malibu is actually a very popular vehicle, though they've started. You've seen a trend where a lot of people are going away from the sedans and they're going more towards the SUVs.
Yeah,
a little bit larger. You've got more capacity, and it just a family of four in a sedan. You're just not fitting it anymore. You look at the stuff that you're bringing. Especially for a new family, it's easier for an SUV. It's actually one of the reasons I got an SUV. I actually got a Saturn Vue when my daughter was born, because I looked at it and we had my Saturn L200. I love that car. It was a stick shift car. You can't find those anymore hardly.
Right.
And we had my wife's car, which was a 1998 Pontiac Sunfire. I had to give up my Saturn L200, which was a sedan, but my wife couldn't drive a stick shift. Got the Saturn Vue. When you have a baby and you're trying to fit everything into a sedan, it just doesn't seem feasible anymore. And then of course my son came along, and which is another interesting thing. You look at costs of insurance on cars themselves.
Yeah.
My Cruze that I had, my Chevy Cruze, which is what I traded in to get my Malibu. The cost for insurance went up maybe $20.
Oh wow!
But you're looking at the cost of insurance itself. You got a safer vehicle in the crew. A 10-year difference. The technology's changed. You're really not feeling the same type of impacts. The damages that you see, while it looks horrendous, is they got these crumple zones. They've got all these things built into the cars that makes it a much safer vehicle. So there's some good things that have come out of it, obviously. But
without a doubt.
But then on the flip side of that, well, there's some great technologies that are coming out, but because we've got this shortage, it all goes back to the shortage. The price of that car has gone up, so the cost of your insurance has gone up, because what is the cost of doing repairs on that particular vehicle? Like I said, it's a snowball effect.
Yeah, definitely, and it's not just the auto industry. It's a lot of different industries. The same thing with the property side as well. Everything has gone up substantially, and like you're saying with the rental cars, it's no longer sufficient to have a rental car for 30 days because 30 days is just not cutting it anymore. A lot of the times they're having to extend it past that because the shortages of the parts and different things like that. So you're having to stay much longer than 30 days. Same thing on the property side, because people are having to stay in temporary housing, be it a hotel space or what have you, longer than what they were anticipating. So if they were thinking, let's do it for 6 months or so, now it's taking 8-9 months. Not as bad during the pandemic. That was that was obviously much worse and much longer time frames, just because you couldn't get anything at all done then. But things are still gone up, prices have gone up, and they've stayed up. And so, like right now, we're seeing like the inflation numbers come out just recently, and they went up. I think it's 0.3%, which is not much on a month-over-month basis, but annually that still adds up quite a bit. I mean, you're talking 3% increase in inflation. And another thing is inflation has gone up so quickly over the past 3 years or so. Since 2020, we saw it rise up so quickly. And even if it only goes up a little bit more each month right now, that still adds up. Because all of a sudden, like you're saying about these cars, now the cars are $48,000 on average.
A truck with $70,000, $80,000, $90,000 for a truck.
Yeah, it never used to be that high. That's insane.
What happened? My first car I bought was maybe a few grand. I bought a 1988 Mercury Tracer hatchback. Greatest car I ever owned. Put it on a rock wall, dented the gas tank, still got massive mileage on it. That thing was a beast. I could fit a ton of people in it, but now no, you can't find a car for a few $1,000s, not even a rental. Heck, when Enterprise does, they sell their cars after a while. You're not getting them cheap from there. You're not getting them cheap anywhere. But you were talking about property issues, and a story came to mind of a claim that I initially started handling. House burnt down. Horrendous fire. The other carrier had a $1.2 million demand finally, and it's been kicking around from Connecticut. It was probably almost 4 years now. We're well past the statute. They had to file suit to protect it. It was actually filed recent, just before the statute, like it was days before the statute on suit was filed. But the issue they were running at parts issues. You're right. It's not just cars. It's property. And costs. You're talking. Typical policy, maybe 25% of your coverage is going to your contents, and then you're looking at replacement costs for a lot of things. Well, the flip side of that is, if the at-fault party doesn't owe replacement costs, they owe actual cash value. And I know the person that's still handling it is still going on. They're getting close to settling it, but it's well into the six figures. You're talking a settlement that should have been, it was a house fire. It's horrendous. Yeah, it should be six figures, but you're talking upper six figures now versus lower six figures, lower to mid six figures. All goes back to parts. What is the cost? They had over a year worth of staying in a rental home. Wow. I think it was $120,000 for a rental home for a year. Yeah. It's like, and then all their stuff was gone. So you're talking, well, now I've got to move like 3 times, because I don't think they stayed in one rental because they had to move a couple of times, I believe is what happened. But so it's a scary thing when suddenly a simple house fire, not simple, I mean the house had to be real, but how long it took to rebuild it is just that's frightening, and the cost that's associated with it, it's a very frightening thing. It makes you wonder what is going to happen if things can't be repaired at a reasonable cost. Are we going to be looking at insurance rate? Yeah, we're going to look at insurance rates going up. Where's that cost? Because the risk is there. You look at any hurricane that goes through, any earthquake, any tornadoes. We talked about that briefly. Hurricane or Tornado Valley, how that shifted, and the cost to get insurance, it changes depending on where you are. Well, it's also going to change because of parts. Yeah. So, so many years ago, and you correct me if I'm wrong on this, but just thinking about this, let's say 5-10 years ago, things are much more predictable. So, and the insurance industry uses that so that they can predict, how much they're going to charge for their premiums. And so they would, let's say for a property,
they would use a certain amount of premiums each month that the homeowner pays. And then they have a fire, like you're saying. A fire comes, and the insurance carrier knows, like, okay, this is going to be 6 months to repair this house, rebuild the house entirely within 6 months. And they could reasonably expect that. It happened on average that they could rebuild the house within 6 months. And they knew the average cost of materials and everything else, and they could calculate it all and get that house rebuilt. Now, you fast forward that into today's time, whenever after you've had COVID and inflation and all these other crazy things that have happened, and things have kind of gotten out of whack, if I'm not correct with this. So all of us, go ahead.
Housing market's horrible.
Oh, that's another thing. Yeah, you're absolutely right.
I bought my house in 2006, right at the height of one of the first housing market, just before it popped. And you're still, my house bought it too high. Thankfully, I never went into the red, with my loan. But you're looking at it again, and the cost of any house. I'm seeing these townhomes go up in our area, starting in the mid 400,000. I'm like, who's buying a mid 400,000? What person is buying this? Who can afford that? It was at one point they always said, go 5 times, 5 years your salary, do 5 times your salary, and that's how much house you can afford.
So nobody's making that much money, not in your area. It's not like $100,000 a year.
If you're talking let's just use 60,000. Say a family's making $60,000 a year.
Right.
That's $300,000.
Mm-hmm.
What house is going for $300,000 now?
Nothing. You can't touch anything for most of the U.S. You can't get anything. Another thing you're not adding into that as well, though, is the cost of interest, because the interest has gone up so much. And on top of that, you got the house prices going up. And that's what I think a lot of people forget about is back in the 80s, the inflation was, 13, 18%. But the houses were also very, very low comparatively as well. They were $30,000 for a house, $40,000. Yeah, that was really, really high interest rates. So even in the 90s, whenever interest rates came down to the 10%, 8% range, home prices were not high. They were up there, but they were not, what they are now. And so now we got hit with a double whammy. You've got high prices, extremely high prices, and on top of that, you've got high interest rates. This is not supposed to happen. The reason they jacked up the interest rates was to lower the price of the housing and everything else.
Well, also control inflation. They want to cool the market. And the market's not showing any signs of cooling, which again creates other issues you can go into, like the cost of parts again. Now you're talking, the cost to repair things again is going up. This is it's just this vicious circle that you see, and you continue to see it, and it's scary. You see 30-year-olds going to live back with their parents because they can't afford to live on their own, or having multiple roommates. And I'm sitting here, I'm like going, okay, this is going on. We're seeing this. We know it's happening. We know it's happening with insurance. Prices of insurance are going up. It all leads back to, inflation, interest rate, supply issues, so the money's got to be made somewhere. And it's like, where's the point that it stops?
Yeah, I don't know on that one. That's, you think something's got to break, something's got to give. And we might be seeing that within the next 6 months or so. I don't know. That's an economist question. And they've been trying to predict this kind of thing now for a while and have been wrong. I shouldn't say all of them have been wrong. Some have been wrong. But it's an economist question as far as when is all this going to give? And then all of a sudden prices start coming down. Unemployment rate will probably start going up. But back to the insurance aspect of this, what you're saying is, when the cost goes up to repair your house and your time out of your house, ALE, your loss of use, your additional coverage on that, and the same thing with rental cars and the auto side, what they're going to do is they're going to raise premiums. They have to. They have to stay in business. They businesses cannot go bankrupt just because they're trying to help you out. They're going to raise premiums, and that's going to, in some markets, it's a lot worse than others. I know in Florida it's really bad. Florida is seeing premiums not go up by 5 or 10%, but you're talking 300%. And if you base your entire budget off of, let's say X, saying that, okay, my entire escrow is supposed to be $2,500, and now your insurance premiums went up 300%, and now it's, $3,200, something like that. A lot of people cannot afford that. They cannot continue like that. And so what they'll end up doing is trying to sell their house or something else. It's causing a lot of problems in some markets. Like I say, Florida is probably a lot worse than the majority of the U.S. just because of a lot of different circumstances. But it's getting to the point where it's really bad. Now you're also talking about autos premiums as well. You're probably going to see those starting to increase as well across the board. And I've just heard recently as well about the health insurance premiums, that those are expected to rise by, I think it's 7%, something like that, 7 to 10%, which wouldn't be that bad, but it's everything on top of everything else. It's like, wow.
You look at your companies that are hiring people and what they're paying out insurance wise, and it's like suddenly they're putting more of that back onto their employees. Exactly. They don't want to pay that premium. Yeah. Well, who's going to pay it? Somebody's got to pay it, and that's it's just a horrifying thought. I mean, you look at everything, and you can look at one aspect of insurance, like the claim side, but then that is going to affect your premiums. You get into a lot of actions, you have a lot of things happen, you spend a lot more coverage, your premiums go up. Well, your premiums can also go up because of external factors, interest rate, inflation, parts prices, all of that. That's it. It's just a vicious circle.
Yeah, no, I absolutely agree with you. Yeah, definitely. Everybody's getting squeezed in that same cycle. And so the same thing happens with the insurance side, is that they're getting squeezed with it. And so what they do is they pass it on to everyone else. I heard that in the health insurance side is that they've been getting squeezed with it now since 2020, but they haven't been able to raise their prices whatsoever because they were locked in. They were locked in under contracts for 3 years. Most of them, not every hospital, but most of them were locked in under 3-year contracts. And so what happens is now we're talking about 3 years. Now it's been 3 years since the start of all this. And so all of those premiums next year are going to start going up. And it might be significantly. So that's another huge headache for everyone to deal with, is like, all right, I'm getting squeezed from all these different sides. And even if the inflation rate doesn't go up much higher, it's already high. It's already high. And now we're talking about, even if it just goes up just another few percentage points, you're like, no, things are crazy expensive across the board for everyone. And I really don't think that most people are being compensated enough to afford that cost difference.
No, you look at your typical raise. It started out to be a cost. Most raises were supposed to be cost of living adjustments. Account inflation. But if you're talking 8, 9, 10% inflation, I don't know a company that's going to give you 8, 9, or 10% raise. Right. It's just not feasible for them. So, exactly. I mean, you make do with what you get and you figure it out. But exactly what's going to give. Are we gonna see a recession? And that's a horrifying thought to see a recession, and then what jobs are going to be affected. It's great when the employment rate's down, but it's terrible when it's up. And then where does that start affecting? Well, again, and I mentioned this. I'm glad I'm in the profession I'm in. There's going to be a need for insurance professionals. I don't think this is one of the things that you can automate.
Yeah. I was actually just talking about the same subject matter on a podcast just before this, and the same thing came up, is in the sense that, you can automate a lot of things. You can automate a lot of things in life, but this is definitely, the insurance industry is one that I don't really think is going away, because you need a personal experience. You need a personal connection. You need to be the person there to actually talk with people, help them out. And I mean, that's what you're doing, right? You're there in the time of need of people. You cannot have a chatbot do that. It's just not the area for it.
There's things that can be automated. There's systems that can be developed that can help you. And they can help the insurance professional, but They're still going to, because there's things that, a machine's not going to take into consideration. If you make it across the board, it doesn't work. You got to look at every little thing sometimes and to figure things out, or you're waiting too long to make a decision because I don't have enough information. One of the things that was taught to me in my career, if you have 80% of what you need, is that 80% enough to make the evaluation and resolve a claim? Obviously that 80%, if there's something large that you're anticipating, no, 80% is not enough. You need that large piece that's missing, and that could be, they've got surgery. Well, I'm waiting on the hospital bills for a surgery, and you need to be able to evaluate those. They talk about lost economic opportunities, LEO, which back in school days in chemistry, LEO meant something else entirely different, but insurance, it's always lost economic opportunities. And you want to get the best settlement as possible. And, the best settlement not necessarily is great for you. It's also not great for them. It's what can we settle at that everybody is going away feeling unhappy about.
What is fair?
Think about it. That's what it is. Nobody's at the end of the day, nobody's happy except for the attorneys when you settle with them.
Right.
They're getting their 30 to 40% no matter what.
Exactly. That's whenever there's litigation involved. Yeah, you're absolutely right. And they're the ones making their big fat cut no matter what.
I slam on attorneys a lot, but I had a lot of friends who were attorneys, and they're actually really, really good people. And you look at defense attorneys, and these are brilliant people. And you sometimes got to wonder what happened to common sense, though. But you've got all of this law knowledge, and you're applying it, and then suddenly, what went there? My attorney friends are great. I love them. They're really good people. Defense attorneys are great. We wouldn't be where we are without them. You've got to have your defense attorneys in the insurance industry. You look at Florida with the reforms that just occurred in Florida.
Yeah, that's right.
They changed from a 4-year statute to a 2-year statute. They went from pure comparative to a modified comparative. So which is a great change down there. But there was something I saw from one of the firms, plaintiff firms down there, that we're not going to give an inch now. You've changed the whole game on us, and we're not going to give you any leverage. I'm like, well, you're going to end up giving it at some point.
Something's going to break. Yeah.
You still need to work with everybody, and people, still want to be able to resolve claims when they need to get resolved. And it made it a little bit of better, in my opinion, because now you're getting away from these, oh, well, they're not completely fault free, and neither are you, so we can still get our money. And it's, you always typically see it where businesses are the ones that are getting affected with that more than the personal insurance, because it is, a tractor trailer accident versus a car, is the tractor trailer company really going to want to go after the personal insurance? Well, they're not going to have enough coverage to get back what they paid to repair their vehicle if it was bad enough. Typically it's the personal insurance, the insured, that is seeking the money.
Right. They're usually the ones suing the tractor trailer rigs or companies, carriers that are at fault, or a lot of times they cause, I think it's 10 times the amount of casualties and accidents in the US per incident.
You look at a tractor trailer, that's a machine that is
right
4 or 5 times your little sedan in weight.
Exactly.
You're talking several tens of tons versus maybe a 2-ton, ton.
2 tons is a large car or SUV.
Yeah.
2 tons is big. That's big. And these big rigs, obviously, like you're saying, they will be able to haul 40 tons. 40 tons is 80,000 pounds, and that's what most of them are rated at in the U.S. And so, the contrast between those two is extreme. I mean, that's
Yeah,
huge.
which goes
10
back to
times
where I
away.
was talking about previously, defensive driving around, being careful around these large vehicles. They've got big blind spots.
Yeah.
They can't brake as quickly as you can. They're you're talking the forces, and so typically when you see an auto accident involving these things, they're bad. They're just going to be
Yeah.
bad. I mean, there's no way around it. And it makes you wonder, especially for me, why aren't people more defensive around these vehicles? They need to be, if you can read this, you're too close. Big hint.
Right.
You're too close.
Another thing is like I think we talked about this last time as well, is, what will happen if an impact, if you get in an accident with another SUV, for instance. Those are the most common on the roads. Those are size comparable vehicles, and they're designed to run into, or I'm sorry to say they're designed to run into each other. They're designed for that type of an impact. So hence, whenever you impact another SUV, your airbags deploy. Everything goes off as it's supposed to. But if you impact a tractor trailer rig, their bumper on their trailers is setting up so high, depending on what you're hitting it with. Sometimes it'll decapitate people because it comes in at the top of the windshield. The airbags won't deploy because they're not sensing an impact until it actually hits the person. And so, there's a lot of different dynamics with all that, as into why they're causing so much more damage, not to mention just the gross tonnage, just like we just talked about. You're talking about something that weighs 40 tons, versus something that weighs probably 1 or 2 tons at the most. And so, yeah, the accidents are just absolutely horrendous. You see a lot more fatalities, right? Because there's going to be a lot more fatalities whenever you hit something that big, that heavy into a car. You're going to have a lot more fatalities. So it is what it is. But, you're absolutely right. What can you do to protect yourself? And I definitely agree with what you're saying. You got to think about not necessarily what's legal or anything else, but like, hey, I'm in my car and I want to stay alive. I don't want to become a statistic and, smash in the back of these cars or these trucks. So stay plenty away. Another thing is as well, I really don't like it whenever I get into their blind spot, because I know where their blind spot is at. Do not try to get in their blind spot as much as you can, because they can't see you. And if they can't see you, they'll go right into you.
That's a lot of where the accidents are. You're in your blind spot and they don't know you're there.
Yeah.
And you're just a little bump on the road to them.
Yeah. Yeah. They barely would even feel what happened to that car. But yeah, so, in that sense, it's best just to kind of think about your self-preservation. You don't want to try to go after and sue these guys. You want to get out of their way and stay far away from it.
But that's a lot of vehicles, though, if you think about it. If we really did our defensive driving that we're supposed to be allowing the proper space between cars that we're supposed to allow, they say it allow a couple of car lengths between vehicles when you're traveling, but you see everybody, oh, there's a car space, let me get in there.
Yeah.
And you just see it gets filled and people going 10 miles an hour over the speed, 9 to 10 miles an hour over the speed limit. The speed limits are there, and I'm guilty of it. Honestly, I've gone over the speed limit and I'm traveling somewhere. But if we pay more attention, there's reasons they put the limits there. They these are what they know that the roads can handle safely. And the phrase that I'm trying to think of, is just people are stupid. Individual can be smart. I hate to use that phrase because there's a lot of really smart.
Right.
But you
mean it just in general as well as, especially whenever you think about people driving. Another big aspect of it as well is driver training, and the fact that we have a lot of people in the United States and they all have driver's license, right? Everybody's going to get a driver's license as soon as possible. You pass the test and you can get on the road. And, there's pros and cons to that, obviously. And then we have a really wide mixture of people, right? You've got old people that are driving, and you've got people that are 16, 18 years old that are driving. And not to mention that, we've got a lot of foreign people in the United States, immigrants that are in the country that are driving as well, obviously. And this different driving styles, I think, really causes a lot of problems, because if everybody drove 80 miles an hour consistently, it'd probably be a lot safer than some driving 50 and 60 miles an hour, some driving 70 and some driving 90. So that's kind of like, all these mixtures causes a huge nightmare whenever you see the differences in speed as well. That causes a lot of problems.
Well, you even go to the simple fact that, if you're talking somebody from England versus somebody, driving in America, and how typically they're driving on the other side of the road.
Oh yeah.
And because you look at it, you look how a car is designed in the U.S., where the steering wheel's on the left. Well, in England, it's on the right, and it makes it making right-hand turns easier for them versus for us, and the left-hand turn is much easier for us because that's the side we're on. But then you think about it, when we're making that left-hand turn, we're typically going across several lanes.
Yeah.
England, you're making that left-hand turn, it's like us making our right-hand turn. And you want to talk about differences in insurance. England or Japan, there was something that I learned a long time ago. I don't know how much true it is anymore, but in Japan, you're automatically 20% at fault for something.
Oh wow. Okay.
You get into that car, I'm like, I thought about that, and again, I don't know how much true it is today, because this was a number of years ago I learned about it. But I thought about that, and I'm like, they're kind of right. We're talking about giving these kids, large weapons is what they are. They're motorized weapons, and they can cause a lot of damage, and you've chosen to drive. There's a responsibility that you've got to have, and it just surprises me, how insurance is handled in different countries, which is a whole nother topic that I don't know enough about, that, somebody smarter than me, a little bit more educated in other countries.
Definitely. I see that, my wife's from Korea, and I've been to Korea many, many times. And I know quite a bit about that from that perspective, is that driving in the United States is a requirement. It's not an option. It's not like, oh, can you drive, or, what else can you take? And then all of the United States, you absolutely have to drive. There is no other option at all. If you want to get a job, if you want to do anything, you're going to drive. You have no other choice. In Korea, for example, and recently Taiwan as well, there's so many other options to take, and they're so convenient that it's kind of like driving is just one of the choices. It's kind of like saying, all right, well, I've got 4 different modes of taking, getting there. I can take the bus, I can take the subway, I can take the tram, I can take this, I can take a taxi, or I could drive. And that instance, 100% agree. If you get in an accident, well, you know what? You're at 20% at fault right off the bat, because you chose to do this. You chose to put yourself in this situation, and you chose to drive. I kind of side with Americans on the side that there's no choice. You never had a decision in this matter at all. You are going to drive. I think another reason that we have so many more accidents, as well as drunk driving, DUIs in the U.S., and that goes right back to it as well. There is no other choice. You are going to drive the car, and you're going to go do whatever you want to do. And that happens to be drinking as well. Is, if you're going to go somewhere and drink, it's almost a guarantee you're going to drive there. You're rarely going to take any other means, because there is no other way to get there. You're going to have to drive. You can now, I give it, a credit, is Uber and Lyft for reducing a lot of deaths and DUIs as well, because they gave you an option. You can take an Uber or Lyft to a lot of places now. That I think it's helped probably more than anything else, is those options right there. But there's no other way to do it for most people. Is you're going to take you're going to drive there. And another thing is, we're so comfortable driving. You everything you do is driving, right? It's part of our culture, and so you're not going to give that up just because you went and had a few drinks. It's not even a second train of thought. And that obviously leads to a lot more accidents and insurance rates going up.
Drunk driving in of itself, if you're convicted of it, there's a chance your insurance policy and you're at fault goes, we're not covering that.
Oh, wow. I didn't know that as well. Wow.
You've done something intentional.
Wow.
You've intentionally drove drunk.
So they can deny the claim.
They can deny,
Correct.
you do intentional acts. You intentionally ram somebody, they can deny it. We don't cover intentional acts.
Wow.
They could choose to deny that. And that's a scary thought again, which goes back to, now your assets are in trouble and there's other issues that can occur. So, I mean, but you're talking about Uber and Lyft, which is another interesting insurance issue because most people are using their private vehicles as a taxi service.
Yep.
And if you read your personal auto policy, there's an exclusion to use your vehicle as a taxi.
So that's more like commercial use, correct?
Yeah,
because you're using your vehicle as commercial.
Coverage. You have to add coverage to your policy. Wow. You can buy additional coverage for it, but then you have to, when you're driving it, you need to determine, was I in the course and scope of being a Lyft driver, or was it my personal use, which makes it very interesting. And then, Lyft and Uber, they typically have reasons, or vehicle standards they want before their vehicle, your vehicle is considered to be a Lyft or an Uber vehicle. So if you got a rundown, dangerous vehicle, they don't want you using it. So if you got something that's damaged, they don't want you using it. And then, you're seeing people that this is their livelihood, where they're making their livelihood doing Lyft or Uber, and suddenly they're in an auto accident and wow, they can't make money anymore. Yeah. Typically on a property damage claim, you don't pay lost wages. You get a rental vehicle and you're able to do what you need to do. But then it becomes an aspect of, well, now you got somebody that relies on their vehicle to make their living. And it's like, do I cover the lost wages, or maybe I cover days and then get them into, you got to look at obviously what Uber and what Lyft approve as an approved vendor to get a rental, or even going through them for a rental vehicle. Which goes back to our issue that we started this conversation with.
Right, with the rental cars.
With rental cars, with even car shortages. Is there a vehicle available for them? Which makes it an interesting, and it's actually one of the things that I'm currently looking into is covering somebody's lost wages because they're a Lyft driver. It's one of the things I'm exploring. Is that something we actually owe? And if we do owe it, how much do we owe? What is the should it only be until we get them into that rental vehicle? Well, if there's an option for them to go through their Lyft or Uber to get a rental vehicle, would we rather pay them, reimbursement for them to be, which basically is a rental vehicle to rent through them? It's an interesting exploration of coverages. It's an interesting exploration of what is going to happen going forward, because we are seeing more of this, and what does their additional policy cover on their vehicles? Is this something that they've added this loss of use to cover their lost wages? It's one of those things that I'm looking into, because I'm actually overseeing a case right now that involves this, and it's like, these are some great questions that have got to be answered. And we've got to look at them. You don't want to affect people's livelihood. We owe them to get them back where they belong, where they were prior to the accident. And if we can't do that because their livelihood is interrupted because they don't have a vehicle, what are we supposed to do? Is there coverage that needs to be added, or they were supposed to add? And actually, it was an interesting conversation with the person, and I don't think they understood that they should have added something to their policy.
Yeah, I mean, probably 99% of people that are driving for Uber or Lyft do not know this as well. Is that is, and I honestly didn't know that as well, is that is excluded. So if you're driving and you're operating, because essentially what you're doing, if I'm not correct, is you're operating your vehicle commercially.
Yeah, you're taxi service.
Yeah, exactly. So Once you operate your vehicle commercially, then it's not covered. You're talking about a totally different kind of policy. The same thing with housing and renting your house out. Once you become a landlord and you rented your house out, then you need a different type of coverage, because that is not going to cover for tenants in your property. They're covering for a primary dwelling, or your primary dwelling. And so if you are renting your property out to
As an
someone
Airbnb,
else,
yeah.
exactly, Airbnb as well, they're not going to cover that. Depends on the policy, depends on the carrier. But most of the time, you need a totally different type of policy. You need like a renter's or landlord policy for that, because you're operating it commercially. Same thing with driving for Uber or Lyft, is you're operating a vehicle commercially, so you need to check into your policy, find out what's in that policy. So is there any advice that you would give to people that are driving for Uber or Lyft to check for in their policy? Like, if you can tell people right now, like, hey, look for this, or I would be on the outlook for what to do with this, or add this into your policy.
Honestly, again, I'm not a licensed broker agent. I'm a licensed insurance adjuster.
Yeah.
I just know, having read many policies, my personal policy and other personal policies, it's written into your personal auto policy that using it as a commercial vehicle is not covered. It's a specific exclusion. So you need to talk to your insurance company, talk to them directly and say, hey, this is what I'm doing. This is how often I'm doing it. What do you recommend I add? And you get the appropriate coverage that you need to get added to your policy. Even if it's, if it's a floater policy, if it's an umbrella policy, you've got to talk to your carrier, you've got to talk to, or your agent, talk to them and say, what is right? Are you casually doing this? Or is this your primary, for an extra buck here and there, or is it your primary source of income? Obviously, if it's your primary source of income, it's going to cost you more because you've got to add more coverage. It's still going to cost you more even if you're doing it casually, and because you need to pay for additional coverage on your policy. And you want to go, again, you want to be protected. You don't want to get into a situation where you're the cause of an accident, you're driving your vehicle for Lyft, you don't have the proper coverage, and then suddenly you're at fault for an accident, and now all of your assets are on the line, and your private insurance is going, you were doing something you weren't covered for.
Wow. And that could happen. That could happen. So you're absolutely right. And it's the best advice, is just, call your agent, talk to them, say, hey, this is what's going on. This is exactly how I'm driving it. I need to be covered for this, because that could put people into bankruptcy. Is, you've got your primary vehicle, which obviously now we know costs $48,000 for a brand new vehicle on average, which is substantial. And if you could be at fault, or they could deny that, that could just completely sink people. All because you're trying to drive for Uber or Lyft, making we shouldn't say a few extra dollars, but nonetheless, extra income. That's crazy. So yeah, definitely worth a phone call to your agent. Call them, find out what exactly I need to add so that I am properly covered in the event of, an accident.
Yeah, add business interruption, because technically you get into an accident, your business has been interrupted. It doesn't hurt. And that's, again, that's the best advice. Talk to your agent, tell them what's going on, and they can work out what's best for you. I can't tell you. I'm not going to tell you. I'm going to direct you to go to your agent, go to your insurance company directly. It's the best advice I can give you.
Yeah, I definitely agree. Okay, excellent, Brandon. I think we covered it. I think we covered it thoroughly. We covered all kinds of different aspects of it all. But it was a lot of fun. I think I learned something. I hope that we put something out there for people that are driving, what to do and how to protect yourself. I think that's really important I'm sure, some people already know about this, but I would assume that a mass majority of Uber and Lyft drivers do not know what exactly is in their policy and how that could affect their livelihood. That could be a huge, enormous deal to them down the road. But I had a lot of fun, and let's do another one if you don't mind.
I'd love to.
We'll pick another subject matter, and we'll do another one in the next few weeks or month down the road, and check into it.
Sure. Sounds like a lot of fun. I enjoy these. I always wonder what I'm going to talk about, and then we just get into it, and the time just flies.
Exactly. All right, Brendan, it was a lot of fun, and thank you for coming on.
I appreciate it. Thank you.